this particular space, I think you are going to find a lot of different SaaS tools that are trying to go to the market together. So I don't know if Everest will ever partner with them, because the kind of a strategy that Everest is taking, they are trying to sell the full suite.
Growing a business requires a holistic approach that extends beyond sales and marketing. This approach needs alignment among people, processes, and technologies. So if you're a business owner, operations, or finance leader looking to learn growth strategies from your peers and competitors, you're tuned into the right podcast. Welcome to the WBS Podcast, where scalable growth using business systems is our number one priority. Now, here is your host, Sam Gupta.
Hello. Good morning, good afternoon, good evening. And today I have done that in the right order. Generally, I mix it up. So welcome again.
Depends on the time zone, though. They could be over in Europe.
Yeah, but I mean, I do good evening first and then good afternoon. So I mix it up, Andy.
Okay.
Yeah. But today I think I'm doing okay. I had that martini that you had. I think that's working for me, Andy. Keeping that in your room. In any case, guys, welcome. And again, today's webinar is about one of the most exciting product from the AI native community. They have been super popular as well, and the product is called DOSS. And again, if you're joining our series for
that sounds state of the art, don't you think?
That sounds like
state of the art.
Yeah, I know that's an
DOSS.
operating system. Andy, I don't.
You got to say DOSS with two S's.
Oh yeah,
yeah, Andy, I don't know. I think you must have used that, right? Because
I did.
You did, right?
I'm old enough.
We all learned computers, I guess. That was the starting point for all of us.
Yep.
And kudos to these guys. I mean, they are always bringing these interesting names to the community. I mean, DOSS may not have as much to do with accounting, but still, this is accounting and inventory software. So again, if you joined for the first time, we have 3 different flavors of the series that we are doing as part of our webinars. Number 1 is the product series, the review series, and we are trying to review as many solutions from the community as possible. This year has been all about AI and AI native, because that's been the theme. We also have a process series in which we teach you how to do ERP. Obviously, Andy is a far better teacher, but we do some part of it, here on this forum as well.
I'm a historian.
He has a lot more context. I mean, our context is going to be slightly partial, I guess, biased.
When I first got in the ERP business, Sam, we were taking those blocks of stone and turning them into wheels. Right?
I know. All right, guys. And the third series that we have is the joint series, in which we invite our friends. So obviously, we want you to hear from their perspective as well. So those are 3 different series. And if you want to catch up on those series, the best way to get updated would be our events and webinar page on elevateiq.com, or you can subscribe to our newsletter. On that note, we are going to start with everybody's intros. Sam Gupta here, principal at Elevate IQ. Elevate IQ is the independent vendor agnostic technology advisory firm. On that note, Phil, do you want to go next?
Sure thing. Hi, everybody. I'm Phil Kerper, Managing Director of Ringling Business Solutions. We leverage years of CEO experience to help our clients win at digital transformation. Nice to be here, Sam. Thanks.
Thank you so much for being here, Phil. Andy, do you want to go next?
Absolutely. And if you call me the ERP historian, you have to call Phil Super CEO.
Super CEO,
with a
yes.
big cape on the back, and you got to get that cartoon next too.
You need to retain the branding as well. You need to call him Super Field CEO.
My name is. We have too much fun, you guys. This is not fair. My name's Andy Pratico. I work with ERP software for manufacturers. I've been in the business all my life. I lived in the U.S. for 11 years. I'm in Vancouver, Canada now, and it's where I was born. And I worked all over North America. And I've been in the business long enough that really I, more than just sell ERP, now I teach people how to uncover the truth before they buy. And I hope I can teach some of you folks too.
Okay, amazing. Thank you so much for being here, Andy and Phil. I mean, people who may not have followed that joke, do you want to tell about the Field CEO series by any chance?
Yeah, so I have a new content series that I started a few weeks ago. It's called the CEO's Field Manual, and episodes come out every Thursday. And so you can check that out on my LinkedIn site, and it'll link you over to the YouTube site. So please go look at that. And this week is a episode that comes Thursday is one close to my heart, which is how to tame the IT spending beast. And we've all worked on that for a lot of years.
Yeah, and we are going to touch briefly on that topic today as well as part of this review. So I'm going to share my screen now. Just confirm, Andy or Phil, if you guys are able to see it. Just one second. Let me do this. Let's see if it is coming up. Hopefully you guys can
Yes,
see
sir.
that. Okay, perfect. Thank you so much, Andy, for confirming that. So I'm going to jump right in. And by the way, if you're in the audience and if you can relate with any of the comments, stories, if you have any related experiences, we are always willing to hear from you. We'll be covering those comments and questions as we go through this review. So just overall, I guess, again, if you're joining for the first time for any of these reviews, I think we have been doing this for the last, 4 or 5 years. Very similar theme, very similar strategy. But again, if this is your first review, we rely on public sources. That is the only information we consider for these reviews. Number one, obviously, our preference always will be for some sort of financial information. We find a lot more truth as part of the financial statements or financial information, if that might be available. In general, with these smaller companies that might be startups, they might not have all of that. But again, our goal is to give you exposure as early as possible. So sometimes, even if we might not have enough information available, we still want to review these solutions. So in terms of the information that was available for this particular product is historical releases, blog posts, and very, 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 very limited user reviews. Sometimes we include some of the product design analysis as well, but for this one, we have not included that. Just because we had enough content to cover, we might come back and do this review again, depending upon how developed they are, how much they have released. But that also depends upon our bandwidth. So in this particular case, and I think we have reviewed 4 or 5 different AI native ERP systems. And Andy, Phil, remind me, I guess. I mean, we have done Campfire, we have done Relate, we have done Everest, we have also done dual entry, I guess. Those 4.
And dual entry, that's right.
Yeah,
Do that
and
twice, yeah.
a couple from FP&A perspective, they claimed they were AI native, but it didn't seem like they were AI native. So those 2 as well. So in this case, this is slightly different. I mean, everybody's calling themselves an ERP. This is different. This is most certainly different. I mean, it's a different layer, different angle, different perspective from the ERP perspective. I think they have stopped calling themselves as ERP. They are calling themselves as ARP, and I think A stands for adaptive as opposed to enterprise. Now, adaptive term has been used by many, many, many different vendors. I think QAD uses that a lot now, or they were using before even AI. So that term is very commonly used. But ARP, we don't know if there is a real category as ARP. We have never come across them. I don't know if any other research analyst firms they are doing. Andy, I don't know if you are aware of ARP as a category.
No, I'll bet you they're coining the acronym.
Yeah. So, I mean, again, we have done some reviews in which they were trying to create a new category. If you are the only player in that category, then I don't know what to do about it. Okay.
You're the best.
And the worst.
And the worst.
In some cases, I guess, I mean, some solutions were really promising, and we felt that maybe there should be some competitors in that category because they were really defining the market. In this particular case, I'm not too sure about that. Okay. So they are calling themselves as ERP, and we'll check. I mean, if that is going to be a category, I guess. So in their
I could
case,
not find it, by the way. I looked, Sam. So
Thank you.
that they're, the only thing related to software that's ARP has nothing to do with this. It's a technical programming, right?
Oh, okay.
Address resolution protocol. It's the only thing that's software related. I don't believe they're referring to that.
No.
No. Definitely not. And this is why, I mean, I think Phil, Andy, you guys have always recommended that stay in your lane, align with the enterprise software categories. If
Yeah.
you're really defining the market, then it's a different case, but creating market is very difficult. Creating a category is very difficult as well. So again, we look for that alignment. That is the foundation of how we think, how we review, and how we structure our quadrants as well. So again, as of now, we are not convinced if ARP could stand, on its own. But even though these guys are calling themselves as ERP, if you look at the underlying themes of what they are trying to do, they are very similar to a lot of other vendors. They did not call themselves as ERP. Generally, they were sold as more of the inventory platform. Okay, and inventory platform is a very different category. Generally, that exists in the e-commerce DTC world. So no surprise there. I guess these guys are targeting DTC and e-commerce world as well. For the most part, this is all driven by how Shopify used to think and how Shopify used to work. Shopify has always argued that, everything should be Shopify experience. But
Go
ERP,
figure.
yeah, exactly. ERP is a very different category. It's not as simple as doing commerce. And that's why, again, ERP is a different beast. Shopify has tried to acquire a lot of different backend channels and try to argue that they can, like, ERP can be an app on Shopify. It didn't go anywhere. They ended up spinning off pretty much everything. So again, those forces could not figure this out. It's a very different category, different strategy. Now, there are many different players as the inventory platform. If we look at their future and where they ended up, I like Skubana example. Skubana was one of the hottest product in the inventory platform category. They were trying to do similar things. They were not obviously AI native because the year they were born, there was no AI. But as such, if you look at their journey, their evolution, it didn't end up as the mainstream software. It ended up being acquired by a 3PL, and 3PL, they are not necessarily in a pure play software business. The only reason why they are acquiring software to maybe get some sort of follow on consulting revenue, whatever, maybe their driver. But again, it's not a mainstream software. It didn't create a company. It wasn't acquired by a software company to define a new market or capture a new market. So that's where our problem is. Now, in general, when you look at the inventory platform category, retail, e-commerce, DTC industries, these are uniquely different. I have personally spoken to some very large retailers, and they don't use any ERP whatsoever. Sometimes their ERP is POS, other times their ERP is a BI layer. So this was never really an ERP industry. Okay. And even if a company is going to use an ERP, the only thing they are going to do from the ERP perspective is going to be GL layer. And the reason why they don't use an ERP in these industries is because they don't care for all of the good things that come with MRP costing. They don't need to care for that. Okay. They have market defined pricing, they have market dictated pricing. So pricing, costing, that's not necessarily a driver. So do we have a real use case inside the retail? I don't know. I'm not too sure about that. So that's where you have play for a company like or platforms like inventory platforms. You look at platforms such as your Katana, Fishbowl, Skubana, which else am I missing? Sin7. Okay, they all are trying to attack very similar problem. What they try to do is they try to disconnect the financial state, and the only thing they care for and the only thing they are trying to solve is the count of the inventory. From the e-commerce operator perspective, from retail operator perspective, the only thing matters to them from the inventory perspective is, am I able to count? Okay, and even if I'm not able to count confidently, that's also okay. It's not the end of the world. Okay, so the definition of inventory is very different. So again, that's why for these industries, the platforms are very different. It's very hard to win over an executive who has never lived in on an ERP state, even with large enterprises. So that's why these platforms exist for a very specific industry, and that's exactly the problem DOSS is trying to solve from the AI native perspective. So what are they? And again, our commentary related to AI native is going to be very similar to what we have spoken about with the other platforms, whether you talk about Everest, Roulette, Campfire, and which is the dual entry. I can do three at a time, or sometimes two, depending upon how much coffee I've had today. So our commentary is going to be very, very, very similar. In some cases, we could find API, some design documentation, but what these companies and platforms have done is they have removed database layers. They have removed schema. Okay. So yes, AI is powerful. AI capabilities are powerful, but all of those database rules don't exist. And these guys have literally bragged about their design. Can you believe this? Okay. When they are arguing that their platform is powerful because they have removed all of those layers. So we are going to touch on all of that. And that's how every single platform is structured. Sometimes they are explicit in their commentary and sometimes they are not. There are implications of that decision. We will talk about that, where we are going to see some gaps, but AI can only work when you are going to remove all of those database rules. That is the constraint of the state of AI as of today. So in their case, and that's why we see a lot of overlap. So in their case as well, we are seeing that these guys are claiming that we can be SNOP, we can be P2P, we can be OMS, we can be channel integration. So some things are easier, other things are going to be harder, depending upon what you care for. Overall, analytics, insights, extraction of the analytics is going to be easier just because the only thing you are dealing with is code. You are not necessarily dealing with database, but then database state is gone. All of those rules, relationality of the database is also gone. So you are going to have a lot of challenges from the integrity perspective. And again, we have been very consistent with our commentary across the board for all of the AI native systems.
Yeah, maybe one other related comment on that. I mean, if you look at their founders,
yeah,
they met at University of Illinois. They're software guys, as I understand it, engineers. That tells you a lot about what their focus will be. And yet they're saying they're operational, and some of the operational things that we're going to uncover here are going to say, well, okay, are we sure that this is going to work? When you have to have a warehouse management system or other things that go along with an inventory-driven retail house. Yeah. And then you look at like Everest, those were SAP execs, or Abercom, those were CFOs. So, I mean, the experiences that the guys bring to this, I think, helps you kind of understand what their approach will be and maybe where some of the gaps will be.
So in my mind, Phil, the way I am seeing the experience of everybody in the AI native community, they are fairly even in my mind. If I recall, then I may be mixing here. I always mix up. My understanding is that these guys came from e-commerce world, and that was the journey of Skuvana as well. Again, we have had a lot of different interactions with Skuvana. And again, when you have a manufacturing operator, when you have e-commerce operator, they think of these things very differently, the way they like to see ERP. They are always looking at this more from the business perspective, which is great. But then your supply chain fundamentals are gone. Your accounting fundamentals are gone. And everything has to line up when we look at the ERP category. That's how we define ERP category. So that's my recollection, that these guys came from e-commerce world. Maybe, I don't know, Phil, there might be a little disconnect there, I guess.
I'm sure they went up through e-commerce. That's not disconnected from what I found. I found that they met each other at the University of Illinois. That's where they originally started their journey, and that had to be years ago. I don't know how old Wiley Jones is, but that had to be years ago.
Yeah, so we might have some of those comments as part of our release as well. So we'll check those in a minute. If you guys have any other comments, questions, no? Okay, perfect. So, all right. So in terms of the competition, as we said, the real competition for these guys would be something like Fulfill. Fulfill is trying to position themselves as AI native as well. We are going to review them. I don't know how AI native, how comparable they are going to be, but we are going to review them. They are part of Shopify ecosystem as well. Katana, I would say, is probably the real competition. They are far more penetrated, adopted in the Shopify ecosystem. They are far more mature, invested. These guys are obviously new right now. I would say Sin7 is a fairly robust category as well, not category, platform. But in their category, they are probably one of the most adopted. Fishbowl and Sin7, they are very mature with their market penetration. So that should be the ideal comparison. Obviously, they might not be as AI native as these guys, but at the same time, they are trying to solve very similar problems. I would say Fulcrum is probably a similar comparison as well, even though Fulcrum is probably a manufacturing solution. Fishbowl is very well adopted in the inventory cases as well. So I would say Fishbowl, Sin 7, those two are probably the right comparison.
I would agree, Sam. I mean, Fulcrum is more targeted at like fabrication shops and machine
Yeah.
shops.
Exactly, but I mean the design principles are very similar, Andy. So they have also truncated the whole finance accounting layer. They feel that the only thing matters from the manufacturing perspective is the actual manufacturing. Okay, everything happens in the finance world. Accounting and accountant should take care of that, and they don't necessarily understand cost accounting, I would say, because that's never going to work. Inventory state is never going to work as well because that relies on your financial layers, financial definition, at least the way accounting teaches inventory, I guess. Uh, Phil, any comments there?
Nope, I think I agree with that, and let's keep diving in because there's some things here that are interesting and exciting, and there's a couple things here that are some, if not red flags, some concerns.
Okay, perfect. All right. So overall context here is, they were positioned as AI native. I don't know. Now they are positioning themselves as inventory centric platform, and we'll cover a story just in a second that now they are trying to pair up with some of the other GL layers, and GL layers would be Campfire, Relate. They don't necessarily have the real inventory centric functionality. So now these two are trying to go together, but again, that's going to be very add-on like experience. You are dealing with two different vendors. It's not the real integration the way ERP layers are supposed to be integrated. So we'll talk about that in just a second. But from the industry perspective, their main penetration is DTC, retail, e-commerce. And again, whose markets are being disrupted? Obviously, QuickBooks is the main one, just because these guys are able to do capabilities such as your multi-entity. That's a big factor for the majority of the AI native platforms. So QuickBooks experience is much easier to replicate. So I think QuickBooks is going to have it'll be much harder for them to compete with these platforms. Xero is the same story. Odoo, it might be harder for Odoo to compete as well. I would say, but Odoo is a far closer to ERP state than these platforms. Zoho might be similar as well, even though they have introduced their own ERP, but that's only available in India at this point of time. Fishbowl, Sin7, and Katana. Those are probably the categories that are going to be disrupted. And again, we don't plan to have this quadrant as of today, but that might change. If we do it, it's probably going to be something like inventory platform because there is a place for these players in the market, at least in the retail industries. Okay, so now in terms of their positioning, so I don't know whether you guys recall or not. If you look at the Everest or Relate Campfire, their positioning was between ERP and FP&A. These guys are overlapping somewhere between supply chain suites, maybe OMS, SNOP a little bit. So this is where their positioning is overall in terms of where they sort of fit in different enterprise software categories. Again, we don't have a category for ERP. If we had, then that'll probably be all over the place, I guess. So now we don't have any other overlap with any other operational categories, MES, EAM, CRM, and these categories are not necessarily going to be relevant to your DTC, etc. There might be some overlap with e-commerce, but that's probably the max that you are going to find with something like DOSS. Again, they have very unique go-to-market strategy now. They are trying to pair up with Campfire and Relate. And again, in this particular space, I think you are going to find a lot of different SaaS tools that are trying to go to the market together. So I don't know if Everest will ever partner with them because the kind of a strategy that Everest is taking, they are trying to sell the full suite. So obviously they might not be aligned with these guys as much.
Overlap, right?
Yeah, their strategy is slightly different. They are not taking as fluid strategy, I would say, in terms of the partnership alliances. They are taking slightly more prescriptive strategy where they are trying to ship as much by themselves as opposed to relying on their ecosystem and partners. Overall, from the go-to-market strategy perspective, Andy, as you know, alliances are powerful, right? That's why these guys are trying to create this. From customers' perspective, depending upon what you care for, I guess. um, Now, here one more comment. Most inventory platforms might have similar positioning with some trending towards OMS, 3PL orchestration. OMS is probably the right comparison. OMS always existed as a category in the e-commerce stack, and the reason for that is because ERP could never do the order orchestration, order consolidation, order splitting, order movement between different warehouses. And generally, if you look at how supply chain suites are constructed, they don't necessarily rely on that financial interleaving or interconnectedness of the inventory layer. They always treat accounting as after the fact. So again, it's a very different architecture for retail companies. So these guys are leaning more towards the retail architecture. That's their core focus, and that's why OMS would probably be the right category for these guys. A lot of OMS vendors might not survive because now DOSS is probably going to play that role. Again, this is the comment. Even we could not find their APIs to be public. So it's surprising that even the newer startups have hidden their APIs for whatever reason. They might be available for customers, but again, we are relying on public information here. So we can't read anything gated, unfortunately.
Could be just food marketing.
It's a marketing strategy, Andy. Yeah. And that's completely okay. It's just that from our perspective, we just cannot read any gated.
No, exactly.
Yeah.
But it's an important one if someone's going to evaluate that, to get some clarity on that when you're meeting with these guys, because it's one thing to not publish them. It's another thing to not have them.
Yeah.
Most likely, I mean, most of the players are going to have. When you have it open, then we can read between the design. But in their case, I mean, they have stated their design principles openly. So, we probably don't need that. That probably would be a second validation that we have validated that this is how their APIs are structured. But again, we don't have access to that. But the philosophy of all the philosophy that all of these vendors are following is very Notion-like, because Notion obviously was a very successful SaaS product, and they started this mindset of removing the database layer completely. Again, ERP is a very different category. Inventory is a very different business principle. So you require that transactional integrity. Removing database layer for accounting, inventory, supply chain, it's a different argument. Okay, I'll keep moving here. So as of today, just because of the unique design and where they stand, they would probably fall somewhere in tier 7 on our map. Just because they are not going to be as comparable with the other tiers. They are very unique in their positioning. And again, we have put Sin 7. I think there is a typo here. This is Katana. This is not Kanata. There is Cantata and there is Katana. Those two platforms are there. There's nothing called Kanata.
Just blended them.
How's
exactly, Phil?
ARP. Now we got Kanata, right?
Yeah, exactly. We have to coin something. You should be coining something every day. That's in the enterprise software industry. Okay, guys. So these guys would qualify somewhere in tier 7, but a lot of AI native vendors are here in terms of capability comparison, in terms of the use case comparison, in terms of how we structure our selection engagements. I guess that's where they would fall at this point of time. But again, in their case as well, a lot of these platforms are going to have some very robust, accounting and supply chain capabilities. In their case as well, they have multi-entity capabilities. They all talk about it. Just because they have multi-entity does not mean that they are going to be comparable with some of the larger ERP systems. I'll keep moving here. So I'm not going to touch on all of these platforms. I'll be focusing only on DOSS right now with some comparisons. I think I have already touched on a lot of those. But if you want specific information about any of these platforms, we have done dedicated sessions for each of them. So you might want to check those. But here, when you look at DOSS, obviously, it's going to have all of the flavors of any of the AI native category, which is faster implementation, conversational reporting, agentic workflows. So you have positives of AI, the advantages of AI, but at the same time, there are compromises of AI as well. And that is the reason why these guys are able to do a lot more. So they are able to do inventory, demand planning, OMS. Traditionally, these categories were separate, and this is the trend that we saw with the other AI native categories as well. If you look at Campfire, Dual Entry, Everest even, I mean, they all are trying to claim that they can do FP&A as well. But again, FP&A is a very different category. So if you try to merge FP&A category with ERP, it just all over the place. FP&A attacks a very different problem than the core ARP. So here, that's why they are trying to do demand planning, which is a very different problem, than your FP&A. If you go to larger analytics suites or platforms, Anaplans, they combine both of those because sometimes the analytics layers, they need to be consolidated as well for the enterprise inside because those workflows need to be connected, intertwined. If you don't have that, then the only thing you are getting is siloed insight. So here, these guys are trying to attack a lot of different problems. They have demand planning. They have spoken about P2P, OMS, channel integration. And again, very, very, very similar to how Katana or Sin7, they have approached the market. So here, what you are going to get partial state of inventory. For DTC, they like partial state of inventory. Okay, it's very, very, very hard to coach them what a real inventory is from the financial perspective. So 90% of the DTC executives, retail executives, e-commerce executives, they'll be so happy to see this because they don't like all of the other boilerplate that comes with ERP. They just hate it. So again, there is a market for this. It might not be the ideal way of doing things, ideal ERP state, but at the same time, there is a market for it. Now, if you talk about inventory accuracy issues, if you talk about pure definition of inventory, obviously you are going to have that. Okay, and we will touch on some of the use cases where we have seen those either during the case studies or reviews that people have spoken about those concerns as well. But you are going to have that. You are not going to get the ideal state of inventory the way it is supposed to be defined from the ERP state perspective. But that's a choice that you are making from the design perspective because you care for ease of use. You probably care for the speed of transactions as well. When you care for that, you lose something. You are obviously going to have a lot of reconciliation, backend, data processing issues, overhead. But again, that's a choice that you are making for yourself. And this would treat GL separate from inventory. That's not the ERP state. ERP state is meant to be very, very, very different. So again, if you are retail DTC and if you care for this design, this architecture, then this is probably going to be the right fit for you. Otherwise, you might struggle with inventory issues for the most part. If you are looking for pure play ERP experience. Fulfill, I think they are going to have very similar positioning. So we are not going to touch a lot on that right now. We'll review them in the next session and we'll be doing the deeper dive of their platform. And we have already touched all of these ones. They are distinctly different, I would say, from DOSS. So they are not probably the fair comparison. If you are comparing these 2 or 3, for the most part, DOSS is going to be for the inventory centric scenarios.
Yeah, and I just wanted to say one thing on the AI native, because we've debated that with some of these other guys as far as, if they're purely that and the pros and cons. I watched part of a video when they released what they call their DOSS bot. Yep. And they demoed something with, with prompts, general questions and I thought it was pretty impressive. And it certainly reflected that this is truly built on AI. They didn't cut a corner there.
Yeah, I mean, 90% of the AI native platforms, they are definitely true AI. I would say all of them should be able to do that if it is not visible from the demo perspective. Obviously, AI has some power, but I mean, I'm personally more worried about the compromises.
I agree, but that's one of the things that they can show some nice things as far as being able to get data organized in a way that allows exceptions, that allows to fix inventory issues. It's funny, they didn't talk a lot on the article I read and then that video I watched on why there's inventory issues in the first place.
Exactly.
They talked a lot about how you can use the AI generative process to find them and fix them.
It's a different mindset. It's a very QuickBooks centric mindset. So depending upon what you want, I guess.
It sounds like it probably has agentic AI. Is that fair, Sam?
All AI native, the AI native implies that they will have agentic capabilities.
Gotcha. Okay.
Yeah, this one certainly does.
Yeah. I mean, even the legacy platforms are going to have agentic capabilities. They all are. It might not be as AI native as this one. And generally, when these guys talk about AI native, they are literally talking about no database. I mean, there is
Gotcha.
database they are storing, but they don't have database rules. That's what. But I mean, again, that has nothing to do with AI as such. The reason why they have done it is because AI works better when you remove those database rules. So here, okay, so we are going back in time. They are fairly new in the market, 2024. Again, they are very well correlated in the Shopify ecosystem, I would say. So here they are talking about Shopify order management with DOSS. Custom workflows for Shopify are now available for all DOSS customers. So again, they are trying to replicate very similar experience as they would find in the Shopify ecosystem. Again, an ERP player can never do that because of those database rules. It's not possible. E-commerce operators, they care for that experience because they are very sales and marketing mindset. Okay, their mindset always was, give me HubSpot experience. I want all of those workflows intertwined as part of my Shopify processes. um, and this is what these guys have tried to do. So you are going to get it, but again, you are going to have challenges from the inventory accuracy perspective, etc. You are going to get ease of use, but again, you are going to have compromises. So Shopify alignment, this we have seen with MailChimp, with pretty much everybody who hangs out in Shopify ecosystem. They are aligning with Shopify values, but Shopify themselves could not replicate the ERP. They had to pivot their own strategy from the corporate alignment perspective because they figured it was too much to handle even just the WMS layer. I'm not even talking about ERP. They didn't even try ERP. They tried only WMS layer, and even that was very difficult for them. They just didn't go for it. So again, the strategy is very similar to Katana, Brightpearl. Brightpearl has had a little bit of accounting, but very minimal. They ended up inside Sage. I would say, I mean, their identity is probably not as clear inside Sage at this point of time. They are acting as just the commerce layer on top of maybe Sage Intacct. But it's not that, I mean, they had to find any sort of market or Sage made a lot of money out of them. So yeah, Brightpearl is a very similar story. Skubana is a very similar story. I would say Fulfill is fairly new, so they are going to be very similar to DOS. Comments? Sorry, somebody spoke? No?
Nope, that's good.
Perfect. Okay, so we have SPS commerce integration. Now, this is also always interesting because if you talk to SPS, they are all going to say, hey, you don't have to go to anybody else. If you're looking for OMS, we are the OMS. Okay, they'll tell you that, but obviously they are not OMS here because DOS is trying to do or play the role of OMS. They are saying that, I mean, you have connectors, so you don't have to go to SPS, but obviously SPS would say that, hey, come to our platform, don't go anywhere else. Okay. So at least you have that integration, which is always good because you are going to get that at least OMS experience. You are going to get all of these commerce orders, flowing as part of the same platform. I would say that's a very OMS experience. That's the problem that the majority of the OMS platforms try to solve, that at least your orders need to be consolidated, even if you are not going to have the complete state of the inventory, at least from the financial perspective. You are going to have just the operational state of the inventory inside the OMS. So they try to centralize that. But again, a lot of supply chain suite platforms, they are trying to do similar things as well.
And this one was just a little confusing. I'm glad you highlighted it, the SPS one, that partnership. Yeah. Especially because they did it in 24. They started in 22, so they did it a couple of years after they started. Yeah. Are they order management or are they inventory management? Now I'm a little confused on where they think their strength is.
You are talking about SPS?
No, I'm talking about DOS, because they did if they truly are as you're describing, which I think makes sense, the center of their target is OMS, then why this partnership?
Well, so they are trying to play at least 2 or 3 different roles. Okay. So my positioning, at least how we would see it, is they would be more of the OMS plus inventory platform. But 90% of the inventory platforms, they were actually OMS, even though they were not formally recognized as OMS category because they handle the operational state of OMS layer. If you look at how market defines OMS, they generally define the marketing state of OMS, which is very different. Okay, generally they are going to have a lot of different marketing layers, channel integration, and there were a lot of different channel integration platforms as well. So these guys are trying to attack all of those problems. So DOS, they are trying to say they are number one OMS, that's one. Okay, but then they are also saying that they are P2P. So now your vendors are actually coming to your DOS as well, which is a little trickier, right? Because for vendors, you would need the MRP workload that need to go through your ERP. It has far more touch on the financial side. If you're simply handling the sales estate, then it's a different case. So, but if you look at some of the e-commerce players, they want the P2P layer as well as the vendor layer touching your OMS layer as well. So then even from the vendor perspective, the financial layer is gone.
Which in B2B is just not workable. It's what in consumer you can say that it's a credit card, it's been approved before it comes in, it's been checked, and you have an order that you can either ship or not, right? It's a cleaner. There's obviously other examples that you're combining orders, things like that. B2B, you got credit limits, you got all sorts of things going on in B2B.
Exactly. You are so right. And again, I mean, if you're going to get into the real inventory manufacturing centric scenarios, and a lot of commerce players are going to have those use cases as well, that they really do care for inventory. We have seen some DTC merchants who are super smart and they are like, no. I need financial state as well. I mean, I care to sell, but at the same time, I mean, financial efficiency is equally important. So in those use cases, they'll have challenges. You're right, Phil. So some of the integrations here. So if you look at the integration, again, very OMS centric approach here. So if you look at them, they have Shopify, QuickBooks, lower end of the market for the most part, Gmail, Airtable, WooCommerce, lower end of the market. Logiva is probably the only one which is slightly upper mid market. They were there in NetSuite ecosystem, but they are also very small, WMS, I would say. ShipStation is a very small shipping add-on. Obviously, they were present in Acumatica NetSuite ecosystem as well, but again, very 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 small add-on. Stripe payment gateway. Now, if these guys are going to have payment gateway, what happens to Shopify? So you have architectural concerns there as well, and then obviously you have SPS Commerce. Okay, I'll keep going here.
I always thought SPS Commerce was more for EDI.
They are for EDI. You are right.
Oh, okay.
So these guys are trying to integrate.
I guess EDI is a kind of an OMS system.
So EDI is a communication engine, communication platform with different, for B2B communication. That's right. OMS is internal platform as opposed to external communication.
All right.
So SPS would not play internal role. Sometimes SPS is going to have their own interface they have developed. Obviously, they have that, right? They might argue that I am OMS because I want all of the orders to come through me.
Right.
But they are only limited to ADI channels. Generally, it's not the best idea to bring all of your Shopify order inside SPS. Unless you ask SPS, I guess. So their core is really to be the centralized hub for EDI centric orders, but that's maybe 20%. Sometimes that could be 30, 40, 50% of the orders.
Right.
So hopefully that answers your question, Andy.
Thanks,
I'll keep moving here.
Okay. Thanks, Sam. Pardon me.
Of course, anytime. 2025, this is where they announced 18 million. 18 million is lower, I would say, as far as the standards of different AI native categories go. So they are not as popular as the other categories. And we agree with the funding as well as investors as well, why they just don't have as much attention as some of the other AI native players. Their scope is smaller, I would say, in terms of the industry. And there might be some challenges from the category perspective as well. That's why they are not receiving as much attention as somebody like Campfire or Relate. I would say they are probably receiving higher attention and much higher investment as well.
And you'll hit it in a later slide, but I mean, they got more money last week announced, 55. So
Exactly.
and that's the plot thickens when we get to that slide. Let's put it that way. I'll do a teaser.
Yeah. Hopefully we get there. I think we might be a little late today. Hopefully you guys can stay on. But let's see. So 2025. So some comments I want to really touch on. So they are saying that DOS ARP could be an app platform, could be an iPaaS solution, could be a data warehouse, and that's where they are literally all over the place.
Yeah.
Okay, pick
Wow.
your lane, guys. What do you want to be? And this is where it's very confusing for the customers as well. Okay, how do we use you? What do you want to be? I guess initially you might be selling it wherever you can sell, I guess. But again, you have to define your category. Okay. So if you look at their customers, 90% of their customers are CPG, furniture, which is also retail. That's what we saw. And again, that's what we are noting in their commentary. They had acquired a platform called Genie, but if you read the fine lines, the only thing they have done is they have killed Genie just to acquire those customers. That's our understanding of this particular story. It didn't add any sort of value, maybe talent. That's probably the max that they got from Genie. And that's why sometimes you need to be careful with very small startups because they can get acquired and just consumed inside a larger platform. Obviously, their goal will be to push for the bigger platform. And I don't know what happened to those customers, but that's a story that we have. Okay, I'll keep going here unless you guys have any other comments. So I think we have gone back in time, or maybe there is a typo here. So here they are building at the speed of business. And this is the database comment that I really want to touch on. These guys are really honest. And these are probably the first ones who have really mentioned this explicitly. This is the struggle that we have had with the majority of the AI native platforms. We were able to deduce, but we were not able to deduce as clearly as we like to see. So here they have literally mentioned that this is their design principle. This is how they have designed it. This is how they operate. This is their motto. And this should be the motto of every single AI native, vendor. That's what we had more at the hypothesis level, that's what is going on in the market. Customers may not know or may not understand the implications of these decisions, but the reason why they have done this is because number one, AI is easier. Number two, sales is easier. Number three, it aligns with the SaaS philosophy, the way SaaS market is penetrated. But again, there are compromises, there are implications. So that's what I want you all to understand that. So that's what they are saying. The key is moving schema control to the application layer, which allows customers to create, modify tables, workflows, and integrations instantly with no code and no downtime. Again, that's a very developer mindset, very developer mentality. This is what developers wanted. They never liked any DBAs. Okay, they always thought that DBAs, I don't know why you need them. Okay, you should be able to handle everything from code. But again, if you remove all of those database rules, there are implications from accounting, finance, supply chain perspective. There are business implications. Okay, and that's what we are slightly concerned about. They are talking about composable tables. So obviously, composable tables, again, everything is created on the fly, meaning there is no underlying structure is what they are talking about. Even the inventory is created on the fly, and there are substantial implications of that decision. And you will see that. And I think, Phil, you pointed that out that, okay, why do you have those inventory problems? Sometimes people sort of know in their gut that there is something going on, but they cannot explain.
Yep. And given the structure, they won't be able to explain, but they might be able to find it.
Yeah.
But you're finding it with either a physical account or a disconnect between your inventory valuation and your balance sheet and what you're finding in the warehouse. That's still a lousy place to be living.
Exactly. And I mean, Phil, the reality of the way this world works, to be completely honest, okay, auditors, they just don't have enough technical understanding, how to audit the books. So obviously there is a real disconnect here, right? The reason why companies are required to maintain the financial state of inventory is because inventory drives companies' valuation. And if that is off, everything else is off.
Well, and just even on operationally, it also usually that's a big piece of your borrowing base, right? So your bank cares.
They do, but maybe they ignore because the whole retail industry is running like this. Literally every single retail company, even the enterprises. So either there is just not enough understanding, I guess, from the regulation perspective, they don't care, or they just keep it loose because everybody else is doing that. But obviously, this is not aligned with how inventory is supposed to be defined financially.
Well, so I think it probably it's like any inventory. I won't go too deep on this, but most inventory systems that even if they're not that particularly accurate, there's puts and takes. Some stuff is negative, some stuff is positive, and the actual financial impact netted is often not hugely material to your lender or even to your business. But that accuracy can drive a lot of other problems, especially if you care about customer satisfaction, on-time shipment, things like that, because you're missing in both directions. So, and you can also do a workaround where you say, I can get darn close to telling you what the financial valuation of my inventory at every month close is. Nobody does, very few people do a count, so they're still estimating it anyways. But this just leaves a lot more error available.
Yeah. So, Phil, I don't know whether you are going to do an inventory story on your Field CEO, video series. But we have personally seen these scenarios, okay, where a business may be $20-30 million maximum, and they have zero understanding of where their $1 million is on inventory. And even if they have complete traceability, auditability, because they are on QuickBooks and they are just not able to trace where that money is, and what they are doing is just some sort of write-off towards the end. And that write-off may not be captured as inventory. Because they are simply trying to reconcile books and nobody knows, what's going on there. So is that right? Who am I to question that, I guess?
Well, it's until it bites someone in the butt. and it becomes a material write-off that actually impacts your ability to be in business.
Yeah, and Phil, I have asked these questions to CFOs as well. Okay, somebody audited these books. Who audited? And this is the comment that we generally get from those CFOs. They tell us that since these audit companies are being paid, sometimes they don't question as much as they should.
Well, that's true as well, and also an inventory audit is a sampling.
Exactly.
And most companies, before they run into their audit, they're going to run a physical anyway, so that they've basically cleaned up most of the problems before the independent in October, before the independent auditor comes in January and does their counts.
Exactly. So let's keep moving here, guys, unless you guys have any other comment. Some more comments.
Just on I'm sorry, Sam, the very last paragraph, I thought was quite interesting.
Let me go back. Sorry. Yeah.
The second to last paragraph. While our QuickBooks integration is fine for standard FP&A, we built something more powerful, a complete in-house general ledger GL. I'm not sure if I understand the bold part. Is QuickBooks an FP&A system?
So they are claiming that you can do FP&A inside them as well. Before, I think this is somewhere in 2024, I guess. So they were trying to position themselves as a real ERP, but now I don't know if their ERP strategy is working. So I don't think they are pitching their GL layer anymore. So they are aligning with Campfire.
So this must have aged out because they look like they want to have QuickBooks or whomever being next to them. They're not looking to do that piece. Nothing else adds up to that, right, Sam?
Yeah.
Exactly. I mean, my understanding of their go-to-market strategy and penetration would be that they would position themselves as a real inventory platform. Otherwise, they'll struggle in the market. It's going to be a real challenge for them. Yeah. Okay, so I'll keep going here. So I think this is the one that you were talking about, Phil, that you have probably looked at the video or played with it. But here's some comments. They have some very interesting comments. So they are saying SKUs and suppliers get referenced in POs and sales orders, which flow into inventory reports. Accounts and departments go in journal entries, which flow into balance sheets and P&L statements. SKUs and suppliers also go in journal entries. So again, that connectivity is where, what we always point out, that's where your inventory valuation as well as costing lives, and that's a real ERP architecture. In their case, they always like to think that, inventory is some sort of count. SKU is not meant to have the financial state, which is not true. Okay, so here they are talking about this isn't AI bolted onto rigid hard-coded ERP data structures. DOSS bot only works because DOSS was designed for AI from the ground up by moving schema control to the application layer. And again, they are really emphasizing that part. Again, what that means is you have literally removed every single inventory rules, controls. So, Phil, to your comment, when you mentioned that you are always going to have those positives and negatives for the inventory, but the question always is going to be how many. Okay, if those are going to be like millions of them, then you are all over the place. That's what happens in the QuickBooks world. That's why QuickBooks feels easier. The more control you are going to have, then the more auditable your books are going to be. The more accurate your inventory is going to be. Okay. I don't have anything else here. They are talking about version controlled configurations here. But the only reason why version controlled configurations are possible is because of those rules that they have removed. But again, that's consistent with every single AI native platform out there. Okay. Some more questions. I think there is a real typo here. This is not the right date. So apologize for that. This is now DOS bot is generally available. This is the announcement.
I think that date's correct, Sam. I think that's when they announced it.
Okay, so maybe the other one was not correct. So okay, so somewhere there is a problem.
DOSSbot. The video I watched was from them announcing it at some convention from 2024.
Thank you so much for confirming that, Phil. So again, they keep talking about some of the things such as your events, attributes, and values. A lot of my analyst friends have argued that ERP is going to be event-oriented. That's a great philosophy, but again, that might not work for the actual financial inventory from the business perspective. And these guys are talking about that as well. This works great for webhooks, for web apps, for marketing-centric applications, for relational applications, for transactional applications. This is probably not the best architecture. Constructs views dynamically from 3 independent data stores. Again, if you are doing this for your SNOP, FP&A, throwaway planning, no problem, guys. You can do as much as you like. Event-driven works in analytical use cases, not necessarily in transactional use cases. The category that you are trying to attack right now is slightly more transactional. That's where the major problem is. So this is more of the design conflict, I would say, design misalignment overall in how they are attacking the market. Now they are talking about fixing find and fix data errors at a scale. So they had some circularly referenced SKUs. Now this problem will never exist in the ERP world. Why would you have that? That will not make any sense to a CFO or even to supply chain managers if they have operated in an ERP state, because the rules are already there and they should prevent this problem. So you are creating problem and then you are solving problem, which is wonderful. So I don't have any other comments here, but you are going to have a lot of data quality issues, related to how this is structured, again, because of those missing rules is what we have spoken about.
And this one really shouts at that's going to occur with their own example.
Exactly. It's very clear. You can see that, Phil, right? On the press release itself. Yeah. So here, then we have some more comments here. While other ERPs have rigid schemas, they have it for a reason. None of the ERP vendors would agree with this comment, I guess. The rigidity is required for business. Okay, you are trying to create a controlled state from your uncontrolled state because you want some sort of process clarity, process coordination, governance, control. You cannot scale your business if you are going to be in this state again. Retail is a very different beast. They have scaled to enterprises in this state. Yes, they have problems, but they have somehow survived. So retail is a very different industry in general. Okay, now they have created something like UMD, which is a very similar concept as unified data model. But again, this would be more FP&A, SNOP. This would not work as much for the transactional use cases. Yes, inventory is one of the hardest problems in modern finance. Everybody knows it. But the reason why it is hard is because inventory is hard. Because you have such a disconnected state, across the board in industries. That's why it is hard. Now we are going in the other direction. We are trying to create a decoupled state, which is not going to solve any inventory problems.
And I think you're right at the point for customers to ask themselves some real questions about scalability of this,
Yeah.
and where and what else are they going to need to have in order to solve some of the issues that this is going to create. I can definitely see this, as long as it's a very narrow model, a business model.
Yeah.
And both on the quantity and velocity of what's moving, maybe they can get away with this for a while. But if you get to anything that's a little bit more robust, I can see this snowballing out of control on them. This is one of the areas where I'm very concerned.
This is perfect for any of these Shopify-centric startups before private equity gets involved. Once private equity gets involved, they understand how inventory is supposed to work. So the first thing they are going to do is they are going to remove all of this, and they are going to put something slightly more streamlined. But for startups, it's great because they just don't have enough understanding of how inventory is supposed to work. Okay. So here, this is the announcement for DOSS and Campfire, and there is a comment related to NetSuite as well. This is the strategic partnership aimed squarely at the gap left by legacy ERPs like NetSuite. Guys, NetSuite would not agree with this comment. NetSuite is not legacy. They are trying to solve a very specific problem, that is the ERP problem. NetSuite is a real ERP. It's not legacy. Okay, it might be hard, but it's not legacy by any means. Okay. The DOSS and Campfire integration isn't a bolt-on. Again, integration in your case is going to be easy because you just don't have any sort of database tools. So that's why integration is easy. But again, you are creating 1,000 other problems. Now they have coined some new terms here, from Gen 3 Cloud to Gen 4 agentic, which is wonderful. More buzzwords, but as such, again, I don't think there is a real problem that is being solved. If we talk about the inventory problems, they are going to remain. They are probably going to become much worse. Okay.
So,
again,
go ahead. Finish that last one. Before you jump the slide, just let me jump it.
No, Phil, you go first, please.
Okay, so this is literally announced last week. March 21st is my birthday, by the way. So it was announced on my birthday. I helped them write it, I bet. But Intuit Ventures, as a new investor, okay, that opens the question of what really is the future between a partnership of QuickBooks and these guys, and are they eventually? Completely. Is that a future more is going to come out of that type of thing for them to jump into this?
If I were to forecast, Phil, I think there is going to be acquisition by Intuit because their market is being disrupted by this. They have acquired MailChimp. MailChimp, they have humongous alignment between MailChimp, this, and QuickBooks. So there is a possibility that they might end up acquiring this. This is very well aligned with QuickBooks and Shopify architecture, and Intuit and Shopify, they are very, very well aligned right now.
I think that if you're buying this software, that down the road, I could definitely see that your supplier is actually QuickBooks.
Yeah. So again, that's their place. That's the market that they are trying to attack. It's a humongous market.
It's not necessarily a bad thing, and it's not a dumb thing. It actually makes sense. But when you said at the beginning that they're disrupting that, and then here you got them jumping in and investing real money, that's worth noting. And it also is worth noting, I forget if it was on yours, I think it was on what I found is on this announcement of this 55 from last week. They also kept all of the original investors. Nobody left. They just added more. So that says their Series A, they must have delivered on some promises to not have any attrition of investors when they go to Series B. They all double down.
So I'll tell you this, Phil. These guys are acquiring logos left and right.
I agree with that 100%. But I'm sure it's funny money in a way, right? It's venture capital, but it also they don't just throw the money at the wall. They want to do something that they've analyzed and has a chance.
But whatever sells is what investors care for, and it's selling. It's as simple as that.
Yeah, that's a good point.
Yeah. Okay, so some more comments here. So this is obviously coming from their slide. So they are talking about, these are application-specific systems. They don't support custom workflows. For example, Katana, Fishbowl. There is a gap between 10 million to roughly $50 million. There is definitely a gap because up to $15 million, if you are trying to implement something like NetSuite or Sage Intacct, it's probably going to be hard. We have seen cases where at $30 million, you might be relatively successful, but then you still don't have that maturity from the team perspective. You don't have a skill set. You don't have a CFO. You don't have a CIO. So there is still a gap. So there is a possibility that they might be able to capture this market. But again, in our mind, these are very similar. When you compare this with Sin7 Katana, there is not much difference. The only advantage here you have is you have a little bit of power of AI. So reporting is going to be easier, compared to these ones. But then I don't know. I mean, they are fairly similar. These guys are able to offer 30-day risk-free trial contract, no credit cards, whatever. But again, when you talk about the real ERP system, you might want to be a little careful if you sign up for this because it might be harder to come out of these contracts. Even though there is no contract, but you still have your data and everything, right, that you are testing. So again, be careful a little bit before you sign up. Okay, so we are going slightly over time. Hopefully that's okay. If you guys need to drop, that's completely okay. We are going to cover some more slides. Here, so this is also coming from their site. And they are talking about system of record. You have workspaces, you have applications, you have workflow editor, and then you have BI, which is a very interesting architecture, I would say. So if you are positioning yourself as more of the SNOP platform, I get it. This could make sense. Again, if you're trying to be more of the Palantir, which does not claim to be ERP, at least we have not seen that in their documentation. But they are attacking a very different category at the enterprise level. So, but if you are trying to be more of the data platform, then the use case would be very similar to Palantir in this case. And again, I don't think they are trying to do that. They are not even attacking any sort of transactional use cases unless you are overdoing Palantir. They are saying allowing users to configure everything. That's not much of a configuration. It's basically error correction in our mind. You will want to have granular control over a table of POs, an individual PO, the line item within that PO, and the details of the specific line item. They are doing table record, subtable record. Again, too much happening on the fly. That's where our major problem is. That needs to be controlled because that needs to be controlled from the business and governance perspective. I think this is the last slide. Again, we could not find a lot of reviews. Generally, when a company is this hot, then we would expect that they are going to have at least 200 different reviews. There is not much available, from the Reddit perspective as well. I think in their case, they just had one positive reviews and one negative reviews. The positive review did not have anything meaningful. Negative one had something meaningful, so we wanted to touch on that. So here the concern, and again, this could be a very angry user, but seems like they have not delivered on their promise. So I don't know what's going on, but again, sometimes, I mean, customers could be a problem here, but at the same time, the problem that they are trying to attack, and the promises that they have made, it'll be harder to deliver on that. That would be my take on that. So that is something to research.
So I read this one carefully, Sam.
Yeah.
This is highly unusual. It's not unusual to get a negative review. All right, that happens all the time. The fact that they have two and most of the places they've got nothing, that's a huge red flag for a company that's been around since 22 that's getting all this funding. They ought to have some customers that will speak. But this is unusual in my mind because as a president or a CEO or an executive of a company, if you have a review that names you personally in it, you respond to that. You put something out there that responds to it as best you can, or you reach out to the customer and you try to clean it up. You don't leave this hanging on the internet. Nobody does. I'm talking about little bitty companies would be on this immediately to say we can't have that sitting out there. That's very, very interesting to me that there's no response here.
I completely agree with you. And this is why these CEOs need to be coached by somebody like Phil. And you probably need to do an episode on this. that don't leave it there because it's just not worth it, I guess.
And you don't have to say anything magical that said that we're sorry you had a bad experience. We'd be happy to continue to work with. That's all you got to say. It doesn't have to be magical.
Yeah.
But you can't just let them say that the CEO was evasive, and after all this time they got nothing that's even workable. That's horrid.
Yeah. It's clearly a leadership problem, I would say. So you're right, Phil. And that's where I guess these guys need to listen to somebody seasoned like Phil and figure their game out, I guess. I think we had a minor typo here.
Someone noticed it on the chat.
I'm here.
Yeah, I cannot even see these days. Okay, what is the typo? Okay, is I think A or E
previous
is.
slide,
I think it's the previous slide. Yeah.
Yeah, I think A or E. I always mix those up.
That's right.
I can barely see these days. All right, guys. So I think that's it for the presentation. We can have quick comments and then we can wrap.
You want to go first, Phil?
Sure. I good review, Sam. And this one's tricky because I did the other ones. I at least got comfortable with a component of what they're doing. These guys, the more I'm looking at them, the less comfortable I'm getting. And I think they need to do a better job of really defining how they're going to manage that database system. And they certainly need to do a better job of getting their customer and getting other people to really document what went well and what didn't go well, what have you. I think it's probably lack of sales and marketing and maybe some executive leadership. And maybe with these investors, they'll get better structure around how they're running it and how they're speaking to the public. Because if I'm buying this software, I get it, they're new, but I'm a little concerned that I really can't understand how much risk I'm taking with this one.
Well, and they're investing the Series B, $55 million. You would think that would be a red flag. My goodness.
And maybe they'll do something about it with the funding. I don't know. Because I think it has promise. It's really interesting, but they're all over the map on what their lane really is.
Well, that leads me to my comment. Stay in your lane. Sam says it all the time. These people are saying they're great at OEM, they're great at OMS, IPaaS, WMS, they're great at everything. Yet, and then they talk about how ERP systems are too rigid, and it's like Sam already commented. I think they're supposed to be rigid. That's just interesting comments all over the place. But I just wanted to say one last thing. They really didn't coin the acronym ARP because my middle name is Russell.
So ARP is going to be what? Automated Russell?
No, Andy Russell Pratico.
Andy Russell Pratico.
Wow, okay.
You're your own category.
I'm my own acronym.
I'm going to have a quadrant for Andy now. I was not planning to have a quadrant for ARP, but now we need to have
right beside Gupta ERP.
Gupta ERP. We need to have two quadrants.
No, two quadrants.
Maybe one for Phil as well.
Oh, here we go.
Anyways, thanks.
I've already got one. I'm Philip Ringling Kerper. That's People Republic of China.
Uh-oh.
Sorry. That's what it is. What am I going to do?
Now we're in trouble.
This is so much fun, guys. All right, guys, if you joined for the first time, this was part of our review series, and we are doing too many reviews. If you want to know about them, the best place would be events and webinar page on elevateiq.com or our newsletter. On that note, thank you so much for tuning in. I'll see you in the next review.
Thanks, everybody.
Thank you for listening to another episode of the WBS Podcast. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. For more information on growth strategies for SMBs using ERP and digital transformation, check out our community at WBS.rocks. We'll see you next time.